Hello and welcome to today's market update. My name is David Vigil. I've been a little out of commission here lately. My computer ran into some technical difficulties, but I think we're up and running. A few things I wanted to discuss earlier that I didn't have the opportunity to. I want to go back to this last Thursday's, a week from today, price action. And we're going to look at most of the major indexes, ETFs, for today, just because you can't see some of the gap ups. Except for on the ETF. So right now we're looking at a chart of SPY, which is a ETF of the S&P 500. Now, let's go and start off with talking about gaps. So there's three significant type of gaps that we want to pay attention to. There's breakout gaps, which generally happen very early in a new trend, right? There's runaway gaps, which typically happen towards the middle of a trend, and then there's exhaustion gaps, which happen towards the end of a trend. When we've seen last Thursday's gap up, we needed to ask ourselves, is this a runaway gap or an exhaustion gap? We know that it's not a breakaway gap because it hasn't happened early in this trend, right? This here, if you look at the prices here, could have been considered a breakaway gap. Now, a runaway gap typically happens at about 50% of the trend's move. So if this is a runaway gap, you can anticipate literally this market doubling, right? Which is not out of the realm of possibility, especially considering the Fibonacci relationship that we have between these two waves here. So we want to pay particular attention to price movement between here and the next few days. Generally, if an exhaustion gap is filled within, say, 7 days, prices will reverse and reverse pretty dramatically. Now, you don't see exhaustion gaps very often in ETFs or in indices, but it's something that we want to pay attention to. So, first off, though, let's go ahead and update our chart. Right, and as you can see, we're still well within the level of the trend regression channel, right? So prices could come down. I would expect for them to test 120.02, which was this previous high, right? If it finds support, then we can expect higher highs. In fact, if it holds and it does not close this gap, then we can expect highs of 23.83 to 125 for a short-term price target. Okay. Now, let me reiterate, if it does fill this gap, it shows that it is an exhaustion gap, and we can see prices moving to the downside pretty substantially. So what would be our initial price target there? Ideally, we'd say the 50-day moving average, which would be 115.86. So depending on how well you're positioned in this market, you either want to tighten up your stops or wait until this kind of plays out. We're really not into a lot of serious trouble until we close below this level here, right, which is between that 50 and 68. We had mentioned in previous videos this MACD level here, and as you can see, we almost experienced a crossover, not quite. But we are closing in, the two moving averages are closing in again. So let's go to the diamonds, DIA. Now we have, again, a channel here that we drew way back when. Now it's not uncommon for prices to break above a channel and not necessarily terminate it. This is typically referred to as a blow-off, right? And you typically see it towards the end of a rally. So part of me, even though I feel like I should trade with a trend, is getting a little concerned that this current rally is running its course. One thing of interest here is this 120.51 level we drew a few weeks ago. We can see that it stopped here at this price level here, and it stopped again here. So the Dow is currently, it has filled its gap. Now, if it finds support, we can expect higher highs. However, if it does not, then we can expect some price declines to about this level at 107.30. Now, if it does find support, we can expect 117.60 for the intermediate price target. I want to show you something with the Qs. This is some analysis I did a while back, And if you watched previous videos, we talked about Fibonacci circles and how unfortunately they're not used correctly with a lot of technicians. This is an example. This is actually a Fibonacci circle here, and I drew this actually way back in April. So this analysis actually took place back in April, but as you can see, prices have vacillated amongst some of these levels. Right, we found some resistance here. Little resistance here, you can see some of the stutter stepping, and then again resistance here. Now one thing we haven't seen in the NASDAQ is a pulling back, and here we see this narrowing of the MACD, which indicates that prices may begin to try to reverse. Now, what are some of our initial price targets? This 38% level retracement's a good idea, so 51.80 to 50.42, we want to see prices possibly pull back. If they pull back and hold, this may be a market that we would consider as a good possible trade setup to go long. Now, we have looked at the precious metals over the last few weeks, and unfortunately I did some analysis, but again was unable to record some of the videos. Now, earlier I mentioned three types of gaps: the breakaway gap, right? This looks like a breakaway gap, which it was. It was early in the trend. An exhaustion gap, which I think we may be seeing in the indices. And in the metals, though, I'm wondering if this is at an actual runaway gap, right? So it looks like it's happening in the middle of the trend. And it's showing some strength here. So you can see, closed above. It blew past our price target. It had a bit of a sell-off, right? But prices are still holding pretty well. We would expect to see exhaustion gaps filled within a 7 to 10 day period, so this is still a point of interest. Now, if prices do hold, and I would expect for prices to come back to this 25.01 level, we could see silver prices progressing as high as 29.60 to 30.20. So we're keeping our eye on silver. Not necessarily a trade setup as of yet. We'd like to see a nice pullback, let the market rest for a little bit like we did here, right? And then and go long. In fact, this is what we would look for, right? We went long here. At that point, we'd have been long that trade. Our stop loss would have been here. Okay. Let's look at gold, GLD. Now, we had an initial price target. Again, it gapped down, right? As you can see, it immediately filled it within a few days. What is that, 7 to 10 days or so? And then it gapped up again, which I'm thinking possibly is a runaway gap. Now, I had set an initial price target of 135.94 to 137.50, and then I revised it actually the same day to 139.06. The high actually came in at 139.15, so it's 9 cents off. Not too bad. But one thing I want to point out is if you watched a few videos, I'm a fan of using these fan lines here, right? We've seen that it was traveling up this 25% fan line, then it dropped, found support on the 38, and now it's trading again above the 25, which is pretty bullish. It would not surprise me, however, if we see prices pull back again to this level here, find some support, right about the 133.45, and then try to continue high. Now, typically, if this does move up and we see a larger retracement, it's not going to be up until the 145 level if it moves to that, and then we might see a pullback as far as 134. So again, gold setting up a possible trade, but not yet. Let's go and look at the euro. And as I mentioned in earlier videos, we've seen this price relationship between this trend and this trend here, right? And it's stutter stepped a little bit. And then we've seen what would have been a 3, a 4, if you're an Elliott Wave subscriber, to a 5. Now, we are in a correction with the euro. The dollar is rallying, which is a surprise considering that many expected the dollar to fall against major currencies after the quantitative easing too. But we're seeing the actual reverse. So this is a trade that you really want to watch. We need to see what the dollar does in relation to the other currencies in the world. Now, our initial target, let me point out real quick, our initial target on the upside was 142. The high was actually 142.28. We missed it by 28 cents. Hey, you know what? I'm okay with that. Our initial price target on the way down, though, depending on how strong this reversal is going to be, is initially 135.86, which if we look today, the low was 135.85. The next stopping point, 133.90, followed by 133.94. Now, this previous high right here, okay, which was 132.88, should provide some pretty strong support, so we can actually see the markets possibly doing something like this, okay, and then possibly moving up to a higher high to this upper trend line. We're going to keep an eye on it, but it has, more likely it will revert back to this lower trend line right here. Okay, so we want to keep an eye on the euro as well. Let's go to the UUP, which is the dollar index. And again, if you watched previous videos, we thought that it would test this lower trend line right here. It did not. It found support. But we did say that it would try and revisit this upper channel, right? Upper channel line, which is at 22.78. If it does break this horizontal support line right here, resistance line, then we can expect the intermediate price target to move to 23.44. If it moves to 23.44, we can also expect that the major indices would continue making lower lows. So we're in a very interesting time right now. There's some trade setups going on, not necessarily a great time to commit money to the market. Some of the trade setups are a little bit more developed, or they're developing, let me say. Anyway, thank you for joining. If you've noticed, I have a site that we're working on. It's for new and recent traders called neotrader.com. And we're still building out the site, but it's going to have some very helpful tools, such as what do I need to get started in the markets if you're not already trading. Some of the questions such as how much money should I commit in an individual trade. Those are some of the tools that we're going to provide you, as well with some market commentary. Pretty slick site. Take a look at it. It's still under development, so feel free to leave me a message and some comments, and we'll try to make it a site that is of some value to you. Again, have a wonderful night, and I look forward to sharing with you some of the market updates in the future. Take care.